Jerome Powell from the Federal Reserve has sat before the Senate today and is testifying about what the Federal Reserve is doing to help reduce inflation and to help reduce unemployment. Jerome Powell ended up speaking a lot about the inflation issues, with inflation being around 5 to 7% currently, and how he is going to control that. He has spoken about reducing the amount of money that the Federal Reserve is spending to zero, actually, by March, and then therefore reducing their balance sheet and pulling the money out that they had put into the market. With unemployment being under 4% now, it's near the 50-year all-time low, which is wonderful. So unemployment's doing well, but it is the inflation that is currently hurting the markets. Jerome Powell did express many times that they will use any tool possible to help reduce that inflation, to help the American people to not have to spend so much money on these items and products. One of those individuals in the Senate committee did bring up the fact that in this scenario, the cattle farmers weren't seeing any more revenue coming in, even though ground beef has gone up to over $5 a pound and is way more expensive than it was before. And his point was that there's 4 companies that process this meat and they own 80% of the market share, and essentially that they are the ones hiking up the prices and that they're the only ones profiting from all of this. And really, it's not being spread out through the whole supply chain. They're just taking advantage of the situation. Jerome Powell expressed many times that he can't do anything as far as the supply goes and the supply chain. He can't control that. His tools that he has to use can't affect the supply at all. What he can affect is the demand. The reason the Federal Reserve has control over demand is because they have control over those interest rates. When interest rates are low, people are wanting to go buy homes, buy cars, they're wanting to finance items, go buy items because money's cheap, as well as big companies. Big companies want to go spend more money, invest more money because they can get that money cheap. Now, when interest rates are high, demand drops because those companies don't want to borrow as much money. Individuals don't want to go borrow more money on a bigger house or more money on a newer car, because it's going to cost them a lot more with higher interest rates. So that is how the Federal Reserve can affect demand throughout the entire country, is by adjusting those interest rates just ever so slightly. On that note, Jerome Powell spoke about how many times they plan on increasing the interest rates over this year. He said the average number throughout the Federal Reserve, when they took a poll essentially, was 3, that they would hike rates 3 times throughout this year, which means that they want to bring down that inflation by hiking up the interest rates ever so slightly, just to affect those numbers and hopefully pull back in the inflation and not have that number run away from us. Interestingly enough, Jerome Powell's testimony in front of the Senate has affected the markets, as per usual. It always does. This morning the market started off actually low, and now they're up a little bit higher. S&P 500 up around 0.5%. NASDAQ is actually up over 1.25% on the day. So the markets are pretty optimistic with what Jerome Powell had to say about the future and where things are going. A few of the senators brought up diversity within the Federal Reserve and why the Federal Reserve doesn't have a more diverse workforce. I'm curious what you guys think. Does diversity in that setting affect the monetary policies that are throughout the country? What are you guys' thoughts and opinions? Let me know down in the comments. I would really appreciate that, and I would love to read them. Thank you so much for watching. If you enjoyed, please subscribe. It helps the channel out tremendously. Have a wonderful day, and I'll see you next time. Bye-bye.